I've spent dozens of hours digging into the latest January 2026 outlooks from top voices like Tom Lee, the All In podcast crew, Scott Galloway, Steve Eisman, Adam Khoo, Defiant Gatekeeper, ITPM, and more, all to help reposition my own portfolio. Honestly, guys, I've done hours and hours of research, and this no-fluff 10-minute video distills the best of it. In this video, you will learn the main positive drivers powering the market today, the consensus view from the sharp investors, and the sectors and themes they're betting on and they think will outperform in 2026. By the end, you'll have a clear map of where the real opportunities might be to beat the market this year. And here's a quick disclaimer. Nobody can predict the future. These are smart opinions, not guarantees. Only invest what you're able to afford. And that said, markets run on narratives, and history shows the pros often nail the direction early, even if the exact numbers vary. The vibe right now, cautiously bullish. So far in early 2026, as of January the 11th, the markets have been showing strong positive momentum. The S&P 500 ended 2025 up a solid 16% for the year. In the first full trading week of 2026, it climbed up another 1.6%, hitting all new time highs and closing at 6,966 on January the 9th, with gains led by materials, industry, and utilities, classic early rotation signals. On the stimulus side, the One Big Beautiful Bill Act are set to unleash 100 to 150 billion in larger tax refunds this filing season. That's a huge liquidity boost for consumer spending and markets in the first half of the year. Further to that, economic signals are mixed but tilting positive. Preliminary University of Michigan consumer sentiments rose to 54 in January, which is actually the highest since September 2025, driven by lower income households. ISM data also shows stabilization too. Manufacturing is still below the 50 at 47.9 in December, which shows contraction but improving versus previous reports, while services PMI expanded to 54.4. These tailwinds, stimulus, cash, resilient earnings, and ongoing AI momentum have set a cautiously bullish stage. Let's keep going here. With that early positive momentum in mind, let's dive into what the top investors and creators I follow are saying about the full year ahead. So first, let's look at the more bullish takes with some volatility warnings. So Tom Lee, of course, from Fundstrat, one of the biggest consistently accurate callers on Wall Street, sees 2026 mirroring 2025's patterns, which is joy, depression, and rally. He anticipates choppiness early, possibly a 10 to 15% pullback or more in the first half from institutional rebalancing and uncertainties, but he predicts a strong finish to the year. His S&P 500 target is 7,700 by year end, supported by resilient earnings growth over 10%, AI-driven productivity, and labor shortages fueling tech spend. He highlights small caps as the biggest winners from rate cuts, deregulation, and M&A. On crypto, he predicts Bitcoin reaching a new time high by the end of January, with the potential for a 200,000 to 250,000, breaking the traditional cycle through institutional adoption and government tailwinds. The All In podcast crew, in their 2026 prediction episodes from January the 9th, is highly optimistic, labeling it a potential Trump boom. They forecast US GDP growth at 4 to 6% or higher. Some like Friedberg at 4.6, others up to like 5 to 6.2%. And of course, this is driven by AI productivity surges, tax cuts, big Fed cuts of 75 to a whole percentage point gone, and ongoing capex. Top assets they favor are critical metals and copper, parabolic from shortages plus data centers, weapon demand as well. They also say the risks include California's proposed wealth tax driving exodus, hydrocarbon oils dropping to around $45 a barrel from electrification, and software disruptions. Now, shifting to the institutional side, major Wall Street banks and asset managers are offering a measured but constructive 2026 outlook, optimistic on their policy tailwinds like fiscal stimulus and AI capex, but cautious on valuation, sticky inflation, and risks. Consensus from firms like Goldman Sachs, JP Morgan, Citi, Bank of America, Morgan Stanley, and UBS point to solid US GDP growth at around 2.2 to 2.6%. Goldman's actually at the high end here. Inflation is sticky at 2.8 to 3.2%, and modest Fed easing of 50 to 100 basis points. The consensus seems 2 to 3 cuts, with rates around 3 to 3.5%. On equities, the median year-end S&P 5 target sits around 75 to 7,600, implying an 8 to 9% upside from early January's around 7,000 levels. The range is actually pretty wide. Cautious calls from Bank of America, it's like 7,100, where you've got more bullish calls from Morgan Stanley at 7,800. And others are even pushing towards the 8,000 range. This tempers hotter takes like Tom Lee's 7,700 with warnings on stretch valuations and potential early volatility. I've actually done a full video on the BlackRock outlook. It's definitely worth a watch because they had some really interesting concepts and really well laid out themes there. The bottom line here is institutions see earnings growth and policy support is driving gains, but selectivity and risk management will be key to outperforming here. Cautious optimism prevails. Let's move on. Now, the more cautious or realistic perspectives, depending on how you see it, that should balance this out slightly. So Scott Galloway on Professor G Markets, in his January the 5th prediction for 2026 episode, expects AI stocks to correct amid diminishing returns for larger models and hype fatigue. He predicts the word of the year as analog, reflecting growth pushbacks against tech harms and social media dangers. The broader markets appeared subdued, but he sees upside in AI diffusion to the real economy and specific tech stock picks. He does mention a lot of Amazon as an infrastructure play here and a possible government AI bailout to sustain capex. Steve Eisman, one of my favorite people on this list, and honestly, we wish him the best in his cancer treatment here. On his Real Eisman Playbook episode in early January, he focuses on long-term structural shifts. He identifies two major AI risks for 2026, power constraints, straining data centers, and secondly, diminishing returns on larger LLMs, potentially a dead-end path towards AAGI. He anticipates a handoff from AI and Bitcoin hype to old economy stocks taking the lead, financials, industrials, and energy. His tone is pragmatic. He says tech dominance creates a K-shaped economy detached from consumer realities, but rotation to undervalued sectors offer the real gains here. Next is Defiant Gatekeeper. I've actually got two of his videos in here. In his first December 26, 2025 video, he talks about 5 things to watch in the market in 2026. He outlines 5 key indicators for early signals on liquidity, sentiment, and rotations. He uses these to frame practical 2026 positioning across assets with bullish skews to Mag 7 and non-Mag 7 AI plays under positive macro signals. Following is the ITPM Flash series. Their recent January the 8th Flash episode and ongoing commentary reinforces the widening K-shaped economy as a core theme in 2026. Basically, AI data centers supercycling, propping up growth, earnings, and asset prices for the winners, which are the tech and the wealthy, while which masks the deepening stress in real economy for others, consumer pressures, uneven recovery. They emphasize positioning for volatility and patience under macro trigger signals as a break in the divide. Okay, let's jump into the exciting part. The sector and themes these top investors are spotlighting as potential big outperformers for 2026. A quick important note here, these key picks in column C are just illustrative, pulled from their public commentary to give you a sense of ideas and rotations. I haven't done fundamental dives in these specific companies or ETFs. And for the upside potential in the last column, these are just rough ballpark figures inspired by consensus views or analyst ranges. With that said, here's the table breakdown row by row. Let's see where the real opportunities might be. So the first row is small caps. This is Tom Lee's top call right now. He sees them as the biggest winners from the Fed cut towards 3%, deregulation and MMA resurgence, and broadening beyond the Mag 7. This is actually echoed by Eisman's productivity handoff. The catalyst would be the first half stimulus from the Big Beautiful Bill Act refunds, the ISM manufacturing stabilizing and potentially rebounding. Row 2 is energy infrastructure and power, the physical pivot of AI everyone's talking about. All in Copper's power crunch, Eisman's constraints, Galloway's real economy diffusion. Data centers could consume huge electricity long term. Picks here like Constellation Energy and Vertiv for cooling and power, Cameco for uranium, just examples to show the theme. Catalysts here could be massive hyperscaling capex booms, 5 to 8 trillion by 2030, new data center deals, and the ISM services expansion, of course. This could be a structural multi-year bull for grid and nuclear, and is perhaps one of the strongest long-term themes out there. Next is the old economy rotation, financials and industrials. This is the handoff from AI. Eisman calls it exactly that. Tom Lee ties it to small cap strength, all in on capital equipment, basically. Undervalued versus tech and defensive in a K-shaped world. You could be looking at JP Morgan or PNC. You could look at industrials like Honeywell or Deere. There's some ETFs also that look into this, like the financials, industrials. Catalysts are deregulation, stimulus, merger and acquisition waves, AI margins boosts. And in my mind, this is actually one of the strongest defensive rotation plays this year. Fourth is commodities, which is copper and gold. All in, call this a parabolic copper call for AI and electrification. The hedge against a sticky inflation in K-shaped warnings. And gold as a safe haven. Examples of this could be Freeport McMoran for copper, and Newmont for gold, or just buying gold out of an ETF. Catalysts for this could be supply shortages, data center demand. For me, copper especially screams AI infrastructure. The last one here, and not the least, is Bitcoin related in crypto. Tom Lee's bold call of all-time high by end of January and 200K plus for Bitcoin later in the cycle. Of course, institutional adoption in Trump era and ETF flows. Illustrative plays, MicroStrategy, Gray, Riot. You could even go for BitMine, which is Tom Lee's Ethereum play on that. And of course, catalysts are government tailwinds, these massive stablecoin growth forecasts. So that's the table. These themes are a summary from the pros, small cap rotating in, the AI real world power needs, old economy defensives, commodity hedging, and crypto catching bids. To wrap this up, 2026 looks like a year of continued opportunity, but not exactly the easy beta of the past few years. The consensus across these creators is clear. They're cautiously optimistic. Early choppiness gives ways to stronger gains later, and a meaningful rotation towards the physical and real economy side of things rather than the pure digital hype. The themes of sequenced gains, AI physical constraints, and broadening beyond the Magnificent Seven are where the real alpha seems to be lying here. That's where I'm focusing my own repositioning on those undervalued or pullback areas that align with the consensus, and why I think selective, patient investors can find meaningful outperformance against the S&P. Markets can always surprise us, so it's important to stay flexible, manage risk, and only invest what you're comfortable losing. Thank you so much for watching all the way through. I hope this saved you a bit of time. Be interested to know what your thoughts are on this. Which creators' views did resonate with you the most? Or which, if there's a sector idea I missed that you're watching for 2026, drop it in the comment. I read them all and might even cover some of them in my next video. See you in the next one. Take care and all the best for 2026.